Good morning, everybody. It's going to be a glorious day this August the 11th, 2015 in Wichita, Kansas. We're forecast to have high temperatures at 85 now. They usually, when things cool down, they usually underestimate it, but at least we won't be pushing 100 with humidity to match like we have been. Okay, the big news overnight, China export were reported over the weekend down 8.5%. They lowered their currency, the yuan, some 2%. And everybody's afraid this will kick off a currency war. China needs exports. China needs to employ. Last time I looked at the numbers, 25 million new workers every year. China, one of China's companies actually having their cell phones, smartphones, assembled in India right now. Last couple of years, China has raised their official pegged labor rate. I think it's 30% a year. So it has changed the economics for their manufacturing game. Another thing I was looking at, and this is the insanity of industrial policy. Liquid natural gas. Natural gas in the United States, about 250 BCF at the wellhead. The lowest price I saw, I believe, was in for Japan, not even China, was like 668. Now, forging, heavy industry, chemicals, plastics. Look at this differential. And in Europe, you can get some places of the world at $7.50. Look at this competitive advantage, and what does our industrial policy do? It negates it. You can't build factories. It takes too long to permit them. You've got OSHA, you've got EPA, you've got all this other stuff. So the strength of an economy is ultimately defined by tax policy and industrial policy. We got the highest corporate taxes in the world. So nothing that's being done out of Washington, D.C. Is encouraging manufacturing. But if we were to allow exportation of crude, we as a reliable supplier, that coal, uranium, anything like that, would be a huge jump. And then open up federal lands for drilling. This manufacturing advantage right here would bring factories back on shore. So we really are a sleeping giant. The economic growth could be explosive if the government would just let things go, which they haven't. So the dollar up. The EU, who's trying desperately to export their goodies to any place in the world that'll buy them outside of the European Union, down their economy. So this is direct impact. Today's news is very, very limited. NIFB small business indicator was forecast at 95, came in at 95.4. Productivity plus 1.6%. Unit labor costs plus a half. That's pretty much the default number. Last month it came in 0.2, and the market exploded off of that because the Fed would not be able to raise interest rates with that kind of labor, and then wholesale trade at plus 0.4. So if the market does react to news today, it'll be unit labor costs. And we have the 3-year auction, which is usually a pretty good one. So we've got, remember when I talked about the 4 stages of market activity? Here's China's move right there when it breaks out. So this is number 1. This is the find a price that cuts off the buying. That's 2. The market then comes back and searches for support, which is basically at 12. And then we move into development, which is where we are right now. So we have pretty solid support down here in this 12 area. So our buy zone, 13 to 9. There'll be some back and forth. We're at 18 right now. We're pushing up. And buy number 2 will be 1 to 5. It may take higher. May take higher to get in. Then sells 23.27. Then 31 to 03. But the news that China hit the markets with last night is significant. It is important. It does change the game. The Fed may still raise interest rates, but probably later rather than sooner is what the market is telling us. And their ability to raise the second and third time by the China's move will be limited. So this, when you get into currency wars, you get short-term gains. The long-term gains are usually negative when you do that. Okay, the knob spread was up by 1 full point overnight. That is significant. So here we are at 28. We've got this little extension at T. We've got this W high here at 8. So 3 to 7 is sell 1. Very, very aggressive. 15 to 19 is sell 2. I like the buy side better. Remember, 4 stages of market activity. This is 1. The rally up started in Asia. This is a price. They found a price that cut off the buying. Market came back, found support in the 15-16 area. And here we are trading 27. So we got a seller, say 158.04, 158.08 to get. And we've got pretty good support down there at 16 to 20. So 17 to 21 will be buy 1. And buy 2 will be 5 to 9. And the reason we like the long side of the market today is the 3-year auction. Okay, gold got a spike. Obviously, China's devaluation makes gold more valuable. China's a huge market for gold, as is India. And again, I'm going to beat it into our brains collectively. Stage 1, price that cuts off the buying. Market came back and found support in the 97.50 area, and we're at 09 right now. So this 3 to 5 area, trying to pick up this London low right here, buy 1. Then 01 to 99, buy 2. On the sell side, 13 to 15. Then 19 to 21. Notice how gold rallied. We talked about it yesterday. Look, we said, you know, people getting excited about this market, maybe a big short squeeze. Little did we know that China was going to devalue. Somebody knew, right? Market rallied. And they don't have to come out and tell you that. They just can disappear from the short side of the market. The seller can step aside. But the way gold acted yesterday, the way that it closed, somebody knew something was afoot. They'd sensed it, or they knew directly what was going on. And do you think that China, you know, I used to watch Russia and China back in the old days manipulate the markets. They would get positions in whatever market they were going to manipulate. Then 3 or 4 days later, they'd come out and as an official government would say something that would impact the markets, and the markets would move. They'd pocket the change, and they'd head back and do it again, get ready to do it again. So again, yesterday in gold, we didn't know what was afoot. I didn't know the yuan was going to be devalued, but we talked about perhaps it was the beginning of a short squeeze because the hedge funds were heavily short. Okay, the European currency is higher. That hurts their exports. That's taken their stock markets down, except for the French stock market. The French stock market was up. Shows you how dependent the French are on imports of somebody else's goodies. But So this is going to hurt their ability to export. Looking at the longer term, let's go take a look at the F1 screen, try to put some stuff into perspective. Okay, we've got this really block here, 114 down to 109. You can just see how thick this is, and this is where the market is trading right now. Eventually everybody thinks it's going to parity with the dollar, but certainly not today. And we're the bottom part of the range, so right here is 111 plus or minus. Right here's 112 plus or minus, and then this move started down at 1275, 1260. So 111 is pretty stout resistance all up to 1260, and then the capping it is up here is 113.75. So 111 is probably going to be pretty hard to get through the first time up there. And the reason for that is that the European Central Bank won't like it when it gets up there, and they might come in and actually defend the position. So just looking at it structure wise, this market is pointed higher. For those of you looking at a split, I go to the longest line of letters. There you have it. So here in London is move number one. You can see we really haven't found a price that has cut off the buying yet. It's not too expensive, so we got pretty good support in the 1025 area. Buy one. This rally started from 75. The breakout in Asia, this 98 area, so buy two, 110. So really 110 even, 110.25 for support. I'm going to put it up here. Obviously we got to get through 50 to get it, but we're going to make 1075 sell one, and then 111 sell two. May have to sell against 50. That is a round number. But right now, I don't see that we found a price. I don't see a tail up here that tells me that the rally is over. One of the dynamics when we come into this is the short covering in the United States. And the currency play, it's not that big a factor like short covering in Europe is, because Europe is the center of the currency markets, and the biggest players in currencies, the biggest market currency is letters of credit, locking in purchases, locking in sales, and that's usually done by the banks. So the damage, for the most part, those that were caught short has probably been done. And you can see right here yesterday's strong rally. You can see how volume held the market last night. You can see we had a strong rally late yesterday. Did these guys know that China was going to do something? Could be. Could be. Somebody always knows. I know, the shadow. Just kidding. Some of us know who the shadow was, or is, or were. Okay. Crude found sellers at 45, and we talked about that yesterday. That was a pretty good number. In fact, they got stops above 45. And we'll just do an Asia split. We'll go take the letter A, click on it, and you can see in Asia right here, not much going on. Asia opens up, not a whole lot going on in crude. It shows you the relative importance of the Chinese market, who are supposedly the ones that really support crude oil and the rest of it. So 45 is pretty good resistance. The selling started at 64. Why do we want to be short? Why is that the favorite side of the market? Well, we're looking at nothing but B's right here, right? There's a pretty clean break at 44.50, and the last rotate up stopped at 44. So 44, 44 and a quarter. It's very, very aggressive. Sell one, and then 50 to 75 is sell two. On the buy side, 43.50, 43 and a quarter. It's where support is. was, might be, and then 42.50, 42.75. 75 tends to stop. That 50 to 75 area tends to stop the buying and the selling. And to the E-mini. What China did is not good for our economy. That means we will export less to China. Now China's pretty, the stuff they buy from us is high tech. It's needed, or they wouldn't buy it. If they can't make it themselves, they've got to go get it elsewhere. So our exports to China tend to be in services and high tech goodies. And doesn't mean they'll stop buying that, but they'll buy less. And then foodstuffs. They'll buy less. So we export food, we export high tech, we export services to China. And they, a lot of our manufacturing base has moved to China over the years. We've built a hell of an economy for China and everybody else. And why is that? Because of our industrial and tax policy. I think Apple alone is responsible for some 3 million workers in China. Think about if those 3 million workers would be onshore in America. So I'm going to split out Asia just to show you what happens when the news hit. Right here, this 95, 97 area is probably pretty stout resistance. And then we have this breakout from 83. So support, I think we can go a little bit lower. I think we're looking at definitely a B. I think the short side is where we want to be. Very, very aggressive, but 89 to 91 is going to be sell 1. 94, 96 is going to be sell 2. On the buy side, 85 is near support. I think we can go lower, so we'll make 80, 82, buy 1. And we'll have to look for Fed intervention today. See if the 50-lot trader is on the buy side on every downtick. That's the easiest way to see it. 89 to 91, we're there. But this market makes you pay up or sell lower if you're going to get in early in the session. It's just, and sometimes volatility is nil, like yesterday, where you really are put in a position where you have to trade the 10 or 15 minute chart and then disappear for long periods of time. We don't have a full market. It's not allowed to sell. So China's move is not good for our economy. Lamont Cranston knows. Okay. Haven't heard that one in a while. Okay, that's all I have right now. Probably 20 minutes or so before I can get everything up and posted. I'll be back with you as soon as possible. Had a lot to talk about this morning. See you in a bit.